So today is the 3rd, and we're gonna hopefully finish up chapter 3, talking about Social Security, but like I said last week, if we don't get through all of it, that's okay. We've got some time on Thursday as well. Thursday, though, we will be spending doing some review for the midterm. You'll see that there is a fold in the module, the midterm module. You do have access to a midterm review sheet. Gives you an idea of what areas to focus on. You'll look at it and you'll be like, well, that's pretty much everything. And yeah, it's a little bit of everything that we've talked about. I can say that the exam is more similar to the assessments than it is to the homework problems. There is still some calculations that have to be done, but it's more along those lines. So it's mostly true, false, and multiple choice. So when you go in there, you'll see the exam is 125 points. But when you go in there, you'll see that it says 135 points. That's not true. There are 2 extra credit questions in there worth 5 points each. It's just that Canvas doesn't do extra credit. So I have to go in there and manually change it after the exam. So that's why you'll see on the, here, where is it? Yeah, so it says, 125 points possible, but like I said, when you get to it and you open it up, which will be done in class, so you do have to come to class in order to take that, you'll open it up and it'll say 135 points. So I didn't want you to be confused as to why that is. So I just have to go in there and change the denominator once it's finished. So you will be able, so this will be next Tuesday, so a week from today. You will be able to use 1 sheet of notes front and back. I don't care if they're handwritten or printed out. They're just notes that you have created. Obviously it helps in the study process as well for you to take those notes and to put that sheet together. But so front and back, it is closed book, so you won't be, when you go on there, you can't, no access to the ebook or anything like that. What else? So you can use, though, the calculators that are on your computers, and hopefully this warm up, these computers warming up, this issue will be fixed by next week. I will, though, try to get in here earlier. I think there's a class in here, though, right before this, which is weird because I don't know why the computers then would, it's the login process. It's not the computers turning on, it's the login process that seems to be so long. But you'll have the whole class period to finish it. If you get done early, you'll be free to leave. Yeah, any questions? We'll go over that again as well. Yeah, Carson.
In class, right?
Well, I'm sorry?
It's going to be taken in class?
Yes,
okay.
In class. So we do have class next Tuesday. You'll come here to take the exam. If something comes up and you are not able to be here, you need to tell me as soon as possible, like on that day. Like if you're sick or something, you need to tell me on that day that is the case, and then I will give you some time to go to a testing center to take it. But don't contact me after the exam and say, hey, I was sick, okay? Unless you get into a car accident on the way here, God forbid. But yeah, Lisa.
So for the proctored exam, considering it's in class, are we going to have to take our personal computers in? Because I don't see cameras on the computers here.
Yeah, I'm the camera.
Oh.
Yeah. So yeah. The respondus is used, when there isn't somebody to personally proctor. But since I'll be here, there won't be any cameras watching you this time. You may have other classes where you have to do that, right? Okay. Like I said, we'll talk more about it as well on. We'll go into a lot more detail on what to expect on Thursday. So in the meantime. So I have, hopefully this is up. I have a little practice quiz to you don't get any credit for it, sorry. It's just to kind of refresh your memory about what we talked about last week. You don't have to register for credit. You don't even have to put your name in if you don't want to. But go ahead and go to, let me see if I can look up the link here. I'll put up the QR code for you. Is the QR code if you want to use that. You can do it on the computer, or you can do it on your phone if your computer's not loaded yet. So take a few minutes to work on that. Just a review of the tax rates and stuff that we talked about last week. Kind of gauge how many people have finished. Yeah.
How do we move on to the next question?
Oh, is it not going on to the next question? Heck, it sure isn't. Hold on a second then. This is supposed to. Survey where you can go through. And do all of it. Hold on a second here. Here we go. Hopefully that works. Oh, yeah, it does. That I clicked on the wrong thing. Sorry. To activate it. Let me make sure that this is now. There we go. That should work. So, I don't know if you need a different QR code.
Maybe.
Okay. So there's, won't stay big. There we go. That I don't know if that link then in the, let me update that link. Those of you who haven't started yet, are you having trouble getting there? The link is updated now in the agenda. So that should get you to where you need to go. people in here and 13 have accessed it. Those who haven't accessed it yet, are you struggling to get there, or?
My
14.
computer's still logging in.
Your computer's still logging in? You can do it on your phone, too.
Well, that's-
You can, yeah, you can use so if you're having problems with the computer, you can use the QR code, or, oh, well, if it would stay big. Sorry. I won't stay. I don't know if I can copy it. Just give it another 30 seconds or so here. Just finishing that up. These up. All right, there we go. So let's take a look at some of these questions. Get here. One, two. All right. So, first question, what is the current Social Security tax rate for employees only? So remember, this is just the employee portion. So that would be your clue there. I know we've got, for employees, there's the employer portion and the employee portion. What I was looking for here was the amount for the employee portion. So, and I put these together just because I also wanted to point out to read those questions very carefully, okay? Read them, go through them a couple of times. So the correct answer here is 6.2%. Able to correct this. Here we go. So 78% of you got that right. Excellent. All right, what is the 2022 Social Security wage base? Right on. That also is 147. So nobody said 200,000, that's good. 160, remember so for 2023, it's 160 and some change, but this is for 2022 for our purposes. And 143 doesn't really mean anything. It was just thrown in there. All right, so SECA taxes, those self-employed taxes, are split evenly between the employee and the employer. So these are SECA taxes. The correct answer is false because there is no employee-employer relationship there, right? Yes, the worker acts as both employee-employer, but you're not technically an employee, okay? So that one would be false. It's paid 100% by the self-employed individual. That one was a little tricky, obviously. So the employee portion of Medicare taxes applies only to the first $200,000 of income. So this is the employee portion of Medicare taxes. That is false. So remember, the $200,000 of income is the employee portion of additional Medicare tax, applies for amounts over 200,000. Here I'm asking about up to 200,000, right? So again, to make sure that wording is clear to you. Any questions so far? All right, FICA stands for, that is correct, Federal Insurance Contributions Act. I like my last one, actually. Fraudulent Income Confiscation Act. Yes, so most of you got that right. Federal Insurance Contributions Act, not agency. FICA taxes consist of what two types of taxes? Income taxes and Medicare tax, Social Security and Medicare, Social Security and income tax. So the correct answer there is Social Security and Medicare tax. Okay, it's not an income tax. We'll get to income taxes next chapter. It is the Social Security and Medicare taxes. OASDI is also known as, and you guys got this one right, Social Security tax, right? It's that old age survivors and disability insurance, also known as Social Security. Social Security plus Medicare equals FICA. So OASDI is not also known as FICA because FICA taxes include Medicare taxes. So you guys got that right? Additional Medicare tax is applied on annual wages over, so again, this is the additional Medicare tax, and that is $200,000, right? For our purposes, and so when you take income tax accounting, you'll find that the actual amount has to do with filing status, but for our purposes in payroll, we don't have that information. We will start withholding that additional Medicare tax once the employee's wages reach $200,000 for the year. Okay. And last one, SECA tax rates for self-employed individuals are, this is the middle one here, you got it. So about 56% of you got it. So this is Social Security, 12.4% Social Security, 2.9% Medicare tax. These are those SECA taxes, so they're paying both halves. Questions? Clarifications? Okay. All right. So let's move on here then to the rest of our slides. So today we're going to talk about when we make deposits. So we've figured out how much we have to withhold from employee paychecks, and we've withheld those funds and set them aside in a separate account because we're good employers. We're not going to commingle those funds with other operating funds. We've set those aside, but how and when do we actually send the money then to the IRS, to the taxing authorities? And then also, we have a report that has to be filled out on a quarterly basis to report to the IRS exactly how much we've paid in wages, how much we've withheld in Social Security and Medicare taxes, and how much we owe as an employer in those taxes also. So we're going to talk about that form, which is called the Form 941, and the schedule for doing all of those things. So let me find SS4. Okay, just a couple of forms that the IRS, that both employees and employers can use. An SS4 form is the form that is filled out by employers to get what's called an employer ID number, an EIN. Okay. Took my good one. So this is an employer ID number, identification number. It kind of acts like a social security number for the business, in that it identifies the business to the IRS. That employer identification number is included on all reports that are sent to the IRS. Also, many of the reports that are sent to other agencies as well, state agencies, for example. So it is very important. It's a pretty easy form to get. It's just one page that's got questions about who the owner is, what their social security number is, how the business is organized. Is it a sole proprietorship? Is it an LLC, a partnership, a C Corp, an S Corp, what have you, and about what type of business you're in. Like I said, it's just one page and it can be done online, and that EIN can be obtained immediately. So oftentimes I would have clients come in and they've just set up a business and they want to talk about payroll, they want to talk about, do some tax planning and all that stuff. And one of the first things we do is we sit down and we get them an employer identification number if they haven't already done so. But it's pretty easy for business owners to just get those as well. I was always happy to take their money if they wanted me to do it, but I also would always advise them that it's something that they can do without having to pay me. So that SS4 form is what's used in order to obtain one of those employer identification numbers. Now the SS5 is for employees if they do not have a social security card. They can apply to receive a social security number using this SS5 form. Okay. Now, obviously, not everybody can obtain a social security card, and some social security cards will indicate that the individual is not eligible to work in the U.S., but if they are in need of a social security number, it would be the SS5 form that is used in order to obtain that. There is an e-verification service that employers are encouraged to use when they hire employees to verify that the social security number that the employee is presenting matches what's in the database, so that to kind of additionally verify. There's the e-verify system for the I-9s, but then there's also a separate system for social security number verification. Okay. So again, SS4, SS5 forms. So this is the form we're going to be going through and looking at. Just initially, filling out this form does cause students some consternation, and we're going to go through line by line and fill it out. I've also got a couple of practice problems for you to play with a little bit. The deadlines for filing this form are super easy. They're quarterly. quarterly. So you file one 4 times a year, and they correspond to every 3 months. So the first one, and let's see, so pay dates, and 9/41 deadline. So if an employee was paid from October to December, well, if employees were paid from October to December during the 4th quarter of the previous year, that deadline for filing the 941 is January 31st. So employers are given a month to get their act together and get these forms prepared. January through March, April 30th. April through May, June, July 31st, and last July through September. And it's October 31st. So we just finished the 3rd quarter. So these are the quarters of the year. Obviously, this is the 1st quarter, 2nd quarter, 3rd quarter, 4th quarter of the previous year. Okay. So we just finished the 3rd quarter because September just ended. Now we're in October, so employers will have this month to get all the information together, gather all of their payroll information, and report by October 31st to the IRS information about how much they paid their employees, how much they withheld from their employee paychecks, Social Security, Medicare taxes, and all that, okay? So this is a pretty easy schedule to remember. It's just broken down by quarters, and the deadline is the last day of the month following the quarter end, okay? If this day falls on a weekend or a holiday, then it's always the next business day. And that is true of every deadline for the IRS. Okay, so that's why sometimes if you guys have ever filed your individual income taxes, everybody talks about April 15th being the day that those taxes are due. Well, oftentimes the day that they're due doesn't really fall on the 15th because the 15th may be a Saturday or a Sunday. And so sometimes it's the 17th, sometimes it's the 16th, sometimes it's the 18th. But in general, they're due on the 15th. But then, like I said, if it's a weekend or a holiday, then it's the next business day after that. Okay. Questions about these deadlines? Okay. So every business is filling out 4 of these a year, if they have payroll. If they don't have payroll, if they don't have employees, they don't fill this out. Now, if they normally have employees, but during one particular quarter, like seasonal employers, if they don't have employees during that quarter or make payments during that quarter, they still have to fill it out. It may be 0 that they owe, everything may be 0 on it, but they still have to let the IRS know. Otherwise, the IRS thinks that they're being ignored. The IRS does not like being ignored. Okay? All right. So if an employer, so that 941 is the form that is used by the vast majority of employers in the US. But there are a couple of other types of forms that can be filled out. So if that's very small employers. So if the total amount of employment tax, Social Security and Medicare taxes, and federal income taxes withheld is less than $1,000, then they can file on an annual basis this Form 944. I don't think I ever filled out a Form 944 in my experience because it's really easy to get to owing $1,000 or more. Now, this doesn't include household employees. Household employees are reported differently, so those are the like nannies, housekeepers, cooks, gardeners, whoever, if they're an employee of the family. That is reported differently. So this is just, it wouldn't include those classifications of employees. Form 945 is a form that's filled out on an annual basis for amounts that are withheld from non-wage type income. So interest income, dividend income, capital gains, pensions, IRAs, so different types of income, not wages. Okay? But for our purposes, it's the 941 that we're concerned with. That's just kind of an introduction to some of the other ones. Let's see here. All right, questions about any of that? Okay, now we're gonna get to the fun part. So this is fairly simple, this whole schedule, right? That's, last day of the month following the quarter end. And we've got 3 months in each of those quarters, and they're just the usual quarters that we all know. This is for reporting the 941, or sending in the 941 forms. However, we have a different schedule when we make the payments. Now the IRS is fine about waiting a while for the forms to be filed, just like with our 1040 forms, our individual income tax forms, right? They only want those once a year, but they want their money a lot more frequently than that. They're like all of us. They, if somebody owes them money, they want it as quickly as possible, right? And also, just like all of us, the more money you owe, the quicker they want it. So if somebody owes you $10, you might be able to wait a month or so for that. You're not in too big a rush to get it back. But if somebody owes you $10,000, you want to get that back as soon as possible, right? So the IRS is the same. So the deposit schedule that they have is based on that the more money a company owes during their reporting period, the quicker they have to make those deposits, and the more frequently they have to make those deposits. The FICA taxes, so the Social Security and Medicare taxes and income taxes are all deposited together at the same time. So everything that's been withheld, as well as everything that the employer owes, so the employer's portion also, it's all deposited at the same time. These are a couple of the most common pay schedules. Actually, this one's pretty common too. We have, we kind of have 5 pay schedules. So we've got, I shouldn't say pay, that confuses it with payroll, deposit schedules. Okay. The first one, we could be annual. And that's when we're using that 944 form, right? This would be form 944. And we would just make that payment. If we owed less than $1,000, we would make that payment then when we file this form. Okay, so again, this is less than $1,000 total. So combined, federal income taxes, Medicare taxes, Social Security taxes, both the employer and employee portion. The next deposit schedule is quarterly. So quarterly amounts are paid if, I'm trying to think what they changed the amounts a couple years ago, and so so less than $2,500 for the quarter. So this is less than $2,500 for the quarter. Then the employer can pay, or can make the deposits on a quarterly basis when that Form 941 is filed. Again, $2,500 a quarter, if you've got a couple of employees, you're probably going to be exceeding that amount. So not as common to have the quarterly payments, but it does exist, maybe for the super small businesses out there. Next is monthly. So again, they fill out Form 941. And this would be if they have, let's see, greater than 2,500, but I think it's equal to or less than, I'm trying to think if it's 50,000 or 25,000. Yeah, 50,000. In a quarter. And these amounts, what I'm talking about here, this isn't the amount of payroll, this is the amount of taxes. Okay? So, monthly schedule, they still fill out the Form 941. They do it on a quarterly basis. This is always going to be due quarterly. For amounts, if they owe between $2,500 and $50,000, actually I think it's $50,000 a year, sorry. I get here, yeah. Actually, it's in the look back period, sorry. 50,000 during the look back. And I'm going to talk about the look back period. The next one is, and you can see we're getting, the higher the amount, the more frequent those deposits are being made. The next one, this is the one that trips up a lot of students. Semi-weekly. Now, it doesn't mean that employers pay twice a week. We think of semi-monthly. I get paid twice a month if I'm on a semi-monthly pay schedule. In this case, semi-weekly refers to 2 days during the week that payments are made to the IRS. And I'll show you, I'll show you here what that means. So again, they use the 941. And this is for employees who have, or employers, sorry, between 50,000, greater than 50,000, but I have to think my greater than and less than here. Less than 100,000 in the look back period. I'll get into a little bit more detail in a second. I just wanted to complete this by talking about the last pay deposit schedule, which is next day. Again, it's reported on the Form 941. This is used the next day, means just that, it's the next business day. So if you have a payroll on Thursday, you run payroll on Thursday, and your pay, your total payroll taxes exceed, wrong way, greater than 100,000 per pay. So the amount of taxes that are accrued during one payroll, if they exceed 100,000, that seems like an awful lot of money for one payroll, especially when we're only talking about the taxes, we're not talking about the total payroll. However, large organizations, that happens all the time. DMAC would be one of those. They would be on a next day schedule. And this next day schedule applies to any of these other schedules at any time when they have over $100,000 liability during a pay period. A lot of big companies would always be on that next day schedule. All right. So let's talk a little bit about when they're paid. So for the quarterly, this is paid with the 941. So it would be paid the last day of the month following the quarter end, okay? Because that's our 941 schedule. The annual paid with that Form 944. So you'd only pay it once a year, right? Monthly, I know I'm kind of, let me erase this here so I can have some space. Look. This again, this is the look back. Monthly, the amount is paid by the 15th of the following month. So if you're on a monthly schedule, for example, September, just finished again, those employers who are on a monthly schedule, they have to deposit their payroll taxes by the 15th of October. Okay, so this is paid 15th of the following month. I'm sorry, you guys over there, I know this is a bad angle here. All right. If you're semi-weekly, this is where it gets a little bit complicated. Oh, did you have a question?
So is it, what form is it paid with? Is it just,
It's just deposited.
okay.
There's no form that actually accompanies the payment, but there's a website where those payments are made. And on that website, so each business gets a login. They register with the IRS with using their employer ID number. They get a login, and then they attach their bank account to that, and they automatically make those payments online. But there's no actual report that goes with it.
Okay.
All of that's just going to be reported on the Form 941. Okay, semi-weekly, again, like I said, it's not it's semi-weekly from the IRS's perspective. The IRS receives payments from businesses that are on a semi-weekly schedule on 2 days during the week. It doesn't mean that the business is going to make payments 2 days a week. When the business makes payments depends on when their payday falls. So, if a payday is on a Wednesday, Thursday, or Friday, then the business has to make that deposit by the next Wednesday. So, let's see this here. So, how do I write this in? So Wednesday, Thursday, Friday, payment is the next Wednesday. Next Wednesday, okay? So, what is today? Today is Tuesday. If we paid today, we would not make a payment by next Wednesday. We're on a different schedule. So that's Wednesday. The second choice is if the pay is Saturday, Sunday, Monday, or Tuesday. I'm running out of room here. So Saturday, Sunday, Monday, or Tuesday, then the payment is on the following Friday. I say next Friday. Well, the following Friday. So if we're on a semi-weekly schedule and today is payday, then we're going to deposit the payroll taxes that we withheld as well as the amounts that we owe. We're going to deposit that by Friday, this coming Friday. Okay. If we pay tomorrow, then we don't have to make that deposit until the following Wednesday. All right. So, and then this next day, again, so semi-weekly, monthly, quarterly, annual, next day, anytime an employer accrues over $100,000 of payroll taxes, then they have to make that deposit by the next day. So if we have payday today, say we normally pay on Tuesday, and usually we would then deposit on Friday, but this particular pay period we had some bonuses and it pushed us over that $100,000. So now we have a liability of over $100,000 in those payroll taxes. Well, that means we're not going to pay on Friday. We got to pay by the end of the business day tomorrow. Okay, that speeds up the timing for when we have to make that payment. Again, the more you owe, the quicker they want their money. Well, the quicker they want your money, the employee's money. right? Let's see here. So, how do we know if we're gonna owe? The IRS tells you. Every November, and I'm gonna talk a little bit now about that look back period. If anybody wants to take a picture of this, go ahead, because I'm probably gonna have to, come on, I'm gonna have to erase this in a minute. Oh, okay. The look back period is the period of time that the IRS then looks at to see how much was owed, and then makes a determination as to what the pay cycle is for the business. Every business always starts out on a monthly pay schedule. So if you're just starting a brand new business, that's what you're going to use for the first year, at least until you've completed your first look back period. And then if it turns out that you owed more than $50,000 during that first year look back period, they're going to switch you to a semi-weekly pay schedule, deposit schedule. Now again, this is to deposit the payroll taxes. Don't get it confused with our payroll schedules, which as a business, we have control over how frequently we pay our employees, right? We could pay them monthly, we could pay them semi-monthly, which does mean 2 times a month, bi-weekly, weekly. We can make that choice, but we don't get to make the choice on how frequently we deposit the payroll taxes that we collect from employees. Okay, so let's talk a little bit about that look back period. Questions? There's a lot of information to take in. So like I said, we essentially have 5 different deposit schedules, and it's going to be based on how much we owe. Yeah, Louisa.
Seems that the small businesses usually start with the monthly.
All businesses will start with the monthly. Yep. They'll start on a monthly schedule until they hear otherwise from the IRS. Every November, the IRS sends notices out to businesses notifying them what their pay schedule is going to, or their deposit schedule is going to be for the next year. Okay? And they do that, they make that determination by looking at the look back period. So, I'm going to erase this. So once a business has established a record, then the IRS is going to use this look back period. Is it on here? That's just more. You don't really go into the look back period all that much on the slides. So your book talks about the look back period. Runs from July of the previous year, so July 1st through June 30th of the current year. So this is previous year, current year. And then, like I said, in November of the current year, notices are sent by the IRS. To indicate next year's deposit schedule. So if it turns out, so you start out on a monthly pay schedule, or deposit schedule, sorry, I'm using those terms interchangeably, and they mean different things. So if you start out, you just started a business, you start out on a monthly deposit schedule, because that's until you establish the record that the IRS can then use. The IRS, you've been in business for a year and a half, the IRS looks at what your deposits were, your payroll tax deposits from July 1st. So if it's right now, they would look at July 1st of 2022 to June 30th of 2023, if the amount is over $50,000, the total amount of deposits was over $50,000, then you're gonna be moved from a monthly schedule to a semi-weekly schedule, starting in January. Okay, and that will continue until you hear otherwise from the IRS. So they're the ones that are gonna look back at this period to determine what that schedule is. So even those next day payers, there's not necessarily a next day schedule. The next day payments occur on a pay-by-pay basis when the amount exceeds $100,000. So if that business is always accruing $100,000 of payroll taxes with every pay period, they would technically be on a semi-weekly pay deposit schedule, but in reality, they are making those deposits the next business day every single time. Again, the deposits are the same as the due dates for the 941. If the deposit due date falls on a weekend or a holiday, then it's going to be the next business day. So for example, if we are on a, say we pay on Friday. No, we pay on Thursday. No, we'll say we pay on Friday. Pay on Friday, and we have $120,000 of payroll taxes that we have accrued during that pay period. So in a combination of federal income taxes that were withheld, Social Security taxes and Medicare taxes that are the employee's responsibility, and Social Security and Medicare taxes that are the employer's responsibility. Total amount, add them all together, and it's $120,000. That means we're gonna have to make that deposit by the end of the next business day. Well, if we're paying on Friday, Saturday's not a business day. Sunday's not a business day. If we've got a Monday holiday, Monday's not a business day. We wouldn't have to make that deposit until the end of Tuesday, right? Ordinarily, if Monday's not a holiday, we'd make it by the end of Monday. Questions? No? All right, so just some of the things that I kind of already talked about. So no deposit required if those employment taxes are less than $2,500 for the whole quarter. Then you make the payment. They say no deposit. What they mean is you make the payment on a quarterly basis with the 941. You're not like going online and making a deposit. You're gonna pay it with the Form 941. New employers are monthly depositors. That would be one exception. So if a new employer ever exceeds $100,000 of liability, then they would be a next day, but only for that payroll. And that'll happen for monthly depositors if maybe they pay out a bunch of bonuses at the end of the year, and they have one pay period where they've accrued that larger liability over $100,000, but then the next pay period it just goes back to normal. Then they go back to their normal schedule. So that $100,000 pay schedule or deposit schedule, sorry, I keep saying that. Deposit schedule is a one-time thing each pay period. So it only applies to those pay periods where it exceeds $100,000. There's some special rules for agricultural workers as well. Agricultural industry has all sorts of special rules with regard to taxes and payments and all of that stuff. Household domestic employees, like I said, they are not, there's no 941. Those amounts are reported on the employer's, so the family's individual income tax form. So it's done on an annual basis. They still have to pay Social Security and Medicare tax. They don't have to withhold federal income tax for those employees. That doesn't mean that those employees don't owe federal income tax. They still may owe. The federal deposit system is where those amounts are deposited. For most payroll companies and businesses with larger payroll departments, they have the software that they use is integrated with that IRS system. So they can just enter all of the information in, and it's gonna do the calculations and schedule the deposit and all of that. For smaller companies who are using QuickBooks, say, which is very common for small businesses, they will have to go in and manually do those calculations. Well, QuickBooks will do the calculations, they should be double checked, but once they know those amounts, then they're going to manually enter that into the IRS EFTPS system. So let me show you what the EFTPS system looks like. EFTPS.gov is where employers go, well, and individuals can go here too to make payments. For new businesses, and I'm not gonna go through this because it's for enrolling, they would enroll. If they're already enrolled, they make a payment, and then, like I said, all of those amounts are paid together. Income tax withholding, Social Security taxes, and Medicare taxes, both the employee and employer portion, all of it deposited together. There is a place in EFTPS where you can designate and itemize, okay, this amount is for federal income taxes that were withheld, this amount is for Social Security taxes, this amount is for Medicare taxes, which is very helpful to the payroll professional when they're doing that, because it helps to track all of that. But this is the government website that runs the payment system. Questions? How are we doing here? Okay, so we are gonna probably go over. Let's look at the Form 941. Well, okay, so I should say this. There is, and not very many, there aren't a whole lot of businesses that still do this through their financial institution, because it's really easy just to go online and make that payment. But you can go to the bank or have the bank make those deposits for you. Maybe just, pick up the phone and call them and tell them what the deposit is gonna be. Not so many people do that anymore, but in the olden days, that's how you did it. You didn't have a website. You physically went to the bank on your deposit day, and you deposited those funds specifically for payroll, and then there was a separate system that the bank had set up where they would then forward those funds to the Federal Reserve. Not as common anymore with using now that we've got the website. All right. Let's look, that's kind of tiny, isn't it? A little better. Let's do this. Slideshow. That's a little bit better. A little easier to see. All right, so this is what, and this 941 form is broken up into sections here that they've displayed. So this is part of page 1 of the 941. So you can see up here, it's all that identifying information. That employer ID number is up here that we applied for through that SS4 form, right? We've got over here an indication of which quarter we are filing this for. First quarter, second, third, fourth. That's up there in the upper right corner. Okay, so down here in part 1, we start to get into the nitty-gritty of the information. And again, this only pertains to whatever quarter we're referencing up here. So in this case, it's the first quarter, right? And this, we can assume that's for 2022. Usually it'll say what year it is, because they change this form from year to year occasionally. There were a lot of changes to it during COVID, because I don't know if you remember, there were a lot of payroll changes and tax changes during COVID. So they had to revamp this, and now we're kind of back to where it was. First question here. They want to know the number of employees who received wages, tips, or any other compensation. Now these are just employees for the pay period, including, and in this case it's March 12th. This would be of quarter 1. If it were quarter 2, I think it's May 12th. So during that doesn't mean that you paid on March 12th, but wherever March 12th fell, they want you to look at how many employees during that pay period that included March 12th actually received any payroll, even if it's a buck. They want to know the number, okay? And that, so you're just counting the number of employees on the first line. Wages, tips, and other compensation. This would be the total amount for all employees. The total amount that was paid to all employees that are taxable wages. And we'll get more into that in chapter 4, because there are some exceptions to the amounts of taxable wages. But this would be amounts that are subject to federal income tax. Okay? So that, again, that's the total amount for the quarter. So everything that was paid from January through the end of March. Third line, federal income taxes withheld. How much was withheld just in income taxes? Federal income taxes. State forms, by the way, states will have their own forms for this, okay? But this doesn't include Social Security taxes. This is just income taxes that were withheld. And we're talking about income taxes withheld from the employees' paychecks. We're not talking about any income taxes that the company itself may owe. It's just pertaining to how much was withheld from employee paychecks. Then we get down to this section here regarding Social Security and Medicare taxes. Now you'll see taxable Social Security wages. Remember, we talked about certain payments that aren't subject to Social Security tax. So even though there may be wages, if they're not subject to Social Security tax, that wage would not be included in there. Because now we're calculating the tax in this section. So we only want to include that income that is actually subject to tax. Okay? So in this case, it happens to match the total amount that was subject to federal income tax, but FYI, that is not always the case. We have certain types of exempt wages that are exempt from federal income tax, but not exempt from Social Security tax, and vice versa. So just as an FYI, that is not always going to be the same number, okay? But this is the amount of wages that are subject to Social Security tax. We multiply that by 12.4%, 0.124. Both halves of the employee, both the employee and the employer's portion there. Sick leave wages, you're not going to do anything with that, at least in this class. Family leave wages, you're also not going to do anything with that. Taxable Social Security tips. So if there were tips that were received by the employees, those would be reported here, and they were taxable. They would be reported here. Because remember, the employer would have, the next month, the employee reports it, the next month the employer is going to withhold those amounts, and then they get reported here in order to be paid. Now, the next line, taxable Medicare wages and tips. So amounts that are subject to Medicare taxes. Remember, so these two can be different as well, because think about if you have employees who have reached that $147,000 wage base. Anything above that $147,000 on a per employee basis is not going to be included here because it's not subject to Social Security tax anymore. But it is still subject to Medicare tax. So it's entirely possible, and it happens frequently, that those two numbers are different. So all three of these numbers could be different. Okay? So when you're doing your problems, keep that in mind, that they could be, it's possible that they could be different. Then that taxable Medicare wages and tips times 2.9%, both employee and employer share there. And then our last line here, taxable wages and tips subject to additional tax, Medicare tax withholding. So those wages for employees that during the year have exceeded $200,000 would be included there. So again, this is always going to be different. If you have anything on this last line, it's always going to be different from these other amounts because it's only going to apply to wages over $200,000, right? Okay. This is the second part of it. All of that then, so 5E, everything in line 5 has to do with Social Security and Medicare taxes. Those are all totaled here. So the Social Security, and you'll see, let me go back to the previous slide. So if we add those up, so 928709 plus 217198, the total for that is going to go here on line 5E, 11,459.07 total amount. So again, that's going to be both the employer and employee portion. Now you'll notice that's an odd number because we're ending with 7 cents. If half is paid by the employee and half is paid by the employer, we should always come up with a positive number, right? Well, a funny thing happens. When you are calculating the amount of withholding for Social Security and Medicare taxes on a per pay basis, it can, and you add up all those pay periods, you can come up with a slightly different number than when you're multiplying by all of the pay periods at once. This part trips students up as well. That is addressed, I know I'm jumping over line 6 here. That is addressed with this current quarter adjustment for fractions of cents. This is to make an adjustment, a rounding adjustment. IRS isn't too concerned with small amounts like that. Okay, those fractions of cents. It happens. Whenever you're talking about percentages and multiplying individual pay periods by percentages and adding all that total then up, you're gonna oftentimes come up with a different amount, slightly different amount than when you total all of the pay together and multiply it by those percentages. So that line is to address for that. And I will share with you, I'll show you how that works. Line 6, I'll go back to line 6 here. This is the total of our Social Security Medicare withholding, so that line 5 plus line 3. Line 3 is the amount of federal income taxes withheld, right? So we're now on this line, we are totaling all of the income taxes, Social Security taxes, and Medicare taxes that have been withheld and the amounts that the employer owes. This is the calculation. This is not necessarily how much was deposited though. So just like when you're filling out a tax form, for those of you who've done an individual tax form before, the tax form itself is calculating how much tax you owe. Very rarely do you actually pay in during the year exactly what you owe, right? When you pay in too much during the year, you get a refund. When you don't pay in enough over the course of the year, you owe additional tax. So it's like a reconciliation. This is also a reconciliation, but because you are doing it on, the payroll department is doing it constantly and are doing those calculations every single pay period, very rarely should you ever come up with an amount of tax that is due that is very different from the tax that is owed. Most times on these 941s, there's not going to be a refund, there's not going to be a tax due. Okay? Like, think of this as a reconciliation form. You are reconciling between what you owed and what you paid. On the 941s, those should be equal. The only times that really they won't be equal is when you've got this funny difference, this rounding difference in the form of fractions of cents. So what they've got down here, this line 10, is actually the amount of deposits that were made. There's on the next page, I'm going to show you how we enter in those deposits that were made. So that's why we are reducing this by 15%. Now, if this were an amount that was like over $1, then we probably have more than just a rounding error, right? And we maybe actually do owe some more or are due a refund because somewhere along the line our calculations were off. But in this case, with 15 cents, that's a rounding error. So this 15 cents we used in order to get us to the deposits that we made because it's a small amount. Okay. Don't have to worry about the lines 11 there. You don't have to worry about 8 or 9 either. Okay, so if you were to go through and read each of these lines very carefully, you would be, the instructions are there on each of those lines. The instructions, and for the most part on most tax forms, the instructions are right there on how the calculation works. Not how the law works, but how the calculation works. You don't have to worry about any of these things. Line 11, you can ignore everything for line 11. Line 12 is just the amount that we had on line 10. We're carrying that down. So 23,831.05, you can see we had 23,831.05. And it tells you, like I said right here, it tells you combine lines 6 through 9. It's giving you the calculation right there, but you do have to read it. If you don't have it memorized as to what you're supposed to do, you can always read the form, and it will tell you the calculation. Like I said, it won't tell you the law. Like it won't tell you this is the stuff that you enter on that line. Like these are the, I don't know, include. Don't, you know, it won't tell you don't include amounts that are exempt from Social Security tax. They assume that you know that, but it will tell you the calculations. So line 12 is the amount carried down from line 10. Line 13A is the total deposits for the quarter. So this is what we had to make that adjustment for the amount of deposits that we actually had for the quarter. All right, 23,831.05. When we did the calculations, we really should have owed 15 cents more, but because it was a rounding difference, we don't have to worry about that. You don't have to worry about anything on line 13, B through F. Line 13G is just a sum of everything on line 13. So we're just carrying that down as well, since we have nothing in these lines. 23,831.05. So we owed for that quarter 23,831.05, and we paid 23,831.05. Actually, we owed 23,831.20, but the difference is just due to rounding. All right, so let's see. Anything here? They didn't enter that in there. Now, this is part 2, and I know you've got problems that involve this in your homework. This pertains to different schedule types. You have to check one of these. One of those has to be checked. The first one is the return, the total tax is less than $2,500 during the quarter, then you didn't have to, you can make that payment when you file the return on a quarterly basis. Okay, so if you're checking this, then that means you're on a quarterly deposit schedule. This one is a monthly deposit schedule. You'll see there's three boxes there. That's to put down the amount of liability, how much was owed for each of the months during that quarter. So January, February, March, April, May, June, yada yada. Okay, and then a total for the quarter. Again, just for monthly scheduled depositors. Semi-weekly scheduled depositors, which this client is a semi-weekly scheduled depositor, would mark this, and then they have to complete a separate schedule called a Schedule B. I'll show you what that looks like here. I don't know if they've got one in the, I don't think they have one in the slides. There is one in your book, but I'll pull that up to show you what that looks like. So if it's a semi-weekly scheduled depositor, you mark that and then you fill out Schedule B. This is just kind of miscellaneous information. If you stopped paying wages, if your business went out of business, tell the IRS that so that they don't expect to get another 941 from you. If you're a seasonal employer and you don't have to file a return for every quarter, the IRS would have to tell you you don't have to file it. You can check there, and then some other miscellaneous stuff here. Signature section, this has to be signed by somebody who's authorized to sign it. Just like you don't, your individual tax return, when you sign it, your grandma can't sign it for you, right? You have to sign it. So the same thing here, has to be somebody who's authorized. So usually I mean, depending upon the size of the business, it could be a president or CEO, it could be the payroll manager, they may be authorized to sign it as well. And then printed name, what the position is, phone number and all that. If you paid somebody to prepare it, that paid preparer fills out that bottom section there. Let's see, I went through all of this stuff already. I want to show you what the, let's see, penalties. I want to show you real quick what that Schedule B looks like. And this one might be a little different because it says it's the 20. No, not necessarily. Okay, so again, what you have here is, and this is, they want to know how much liability you incurred and when you incurred it. Identifying information up here for the business, what quarter we're referring to. There are 3 sections here for each month during that quarter. So if we paid on, let's say we pay on the 10th and the 24th. So on the 10th, we put in how much our liability was. Oops. And then on the 24th, let's say we had the same liability. Total liability for the month was $12,000. We're gonna do that for each of the months. So this date refers to not when you made the deposit. And again, this is for semi-weekly or next day depositors. This refers to when you incurred the liability. They already know when you made the deposit. They've got record of that. They want to know when you owed the money. Because if you waited too long, if you were a semi-weekly depositor and you were supposed to deposit on Friday, but you deposited on Monday, you're going to get a penalty for that. Same way if you were a next day depositor, should have been a next day depositor and you didn't deposit it the next day, you're going to get a penalty for that as well. So this date that's on each of these pertains to the day of the liability, the day the liability was incurred. All right, look back period. I went through that. Okay, so it's time now. What we'll do on Thursday, we'll work through some 941 problems, okay? And then we'll do some review for the midterm. Sound good? I know it's a lot of information. Those schedules can be kind of confusing as well. All right, so let me know if you have any questions.